It's going, hopefully. We'll see a few people jump on in a moment. Thursday, the 8th of July. Welcome to another Wealth Coffee Chat. Jason Witten here. Quick intros as I usually do. Welcome back, or thanks for coming back for those who are returning. Kicked off a little bit early today. Usually I'm a little bit later than this, but I've got another appointment at 10 minutes past 8, so I thought I'd jump on a little bit early today and have a quick Wealth Coffee Chat with you guys, the two Jameses. G'day fellas, how are you? Good to see you guys here again. Bridget's dialing in all the way from Adelaide. Good to have you, Bridget. Good to see you. Alison, as always. Awesome to have you on with us this morning as well. And wherever you are, welcome. Good to have you here. Give us a shout out in the chat. If you're, Brad's in lockdown in Sydney, mate, thinking of you, buddy, thinking of you. And Naomi, good morning to you. Anyone who's new, give us a shout in the chat. Say hello. Jason Witten's my name, as I said a bit earlier. Property investing over 20 years and coaching property investors over 18 across Australia and New Zealand. And along the way, we've done a few things, paid a bit of attention, and we like to share a little bit of that in the mornings. Ryan, good morning, mate. Good to see you dialing in from YouTube. Away we go. So, yeah, welcome. This morning, I wanted to have a bit of a chat about something that's pretty interesting out there in the marketplace right now, which is kind of almost like what I'd say a negative when it comes to markets that are booming, right? You guys might notice right now all of the media, all of the rhetoric. Oh, mate, all the markets are booming. Everything's going up. You know, everyone's killing it. Everyone's made money. You know, Melbourne average house price, you know, hits record high. Sydney average house price hits record high. You know, et cetera, et cetera, et cetera. And you would be quite sensible in thinking, well, everywhere's going up. Every property's going up. Every single thing in the universe in Australia right now should have gone up in value and had truckloads of money and all of this sort of stuff. And the answer is that is not true. That is not accurate. And it is never accurate. Big sweeping statements made by media or reports about average house prices, which means every single property in the whole market averaged out, put down into one comment, it's inaccurate. It's stupid. It's a dumb idea. It's actually very poor for you and me as investors to behave and think that that is information, that is accurate information we should make decisions and behave on. And one thing I wanted to sort of touch on today just quickly is a bit of a warning about, about the psychology of right now, this is where I saw this last time in the market where we had a boom. All right, this is the warning, right? The warning. Last time we had a boom in 2000, it was mid-teens 2000s, prior to the GFC. What happened in a number of cases, I chatted with people, they in their mind got that if their property hasn't gone up right now, then it's a rubbish property, all right? Now, that is completely inaccurate because, gang, what I want to chat about today in this concept is that when we set our plan and we buy our property, you know, we have a plan to buy that property and keep and own that property for 15 to 20 years, okay? And Sam Saggers, my business partner, says this all the time. and jump onto his podcast, Urban Property Investor, if you're keen to hear from Sam. We have a plan. You buy the property, right? You buy the property, and we say, righto, we're going to be together, property, for the next 15 to 20 years. Can you do what you have to do? Okay. And properties don't talk, but just imagine this. The property says, yeah, no problems, Jace. You know what I'll do? I'll be a property. I'll be here in this location. I'll be available to rent, and I'll behave in the way that most properties will over the next 15 years, which will mean someone can live there, someone can pay the rent, and you can get an income and some value out of it, right? So the property says, yeah, let's do this, all right? But what happens is you, me, we're traveling along and we're looking over the fence and we're looking, the grass is greener, all right? The grass is greener. Someone else's green grass, and my property's just gone like this, and you see that on the news, on the media, one of your friends, somebody says, oh, I bought a property somewhere else, or someone else had another property and it's gone up in value, and you're here 3, 5, 7 years in, and now you go, oh, my property must be rubbish. My property must be crap. And you start now to give up on the strategy, on the property, on the thing that you decided back here, where you made a decision it was going to be your strategy for 15 to 20 years. My warning right now is that the marketplace is certainly moving in a positive direction when it comes to capital growth, when it comes to rents. Now, not every single property will be affected in the same way. Maybe you purchased a property in an area that was overpriced to begin with. Maybe you paid more than you should. Maybe you've purchased in an area that's not attractive right now. Maybe it's not a quality area. What we do know is the top end of the market is moving way faster than the bottom end of the market right now. Okay, the quality in the luxury end, it's a top-down boom happening right now. People paying $2 and $3 and $4 million, $1 million in comparison to the bottom end of the market. The top end is moving a lot faster. My shout out to you guys is to make sure through this boom, you don't lose sight here and give up on the strategy that you committed to at the start, okay? 15 to 20 years. In 3 years' time, in 5 years' time, in 10 years' time, in 15 years' time, all right, that is when we make our decisions about how we're going to deal with our exit and our passive income and all of those sorts of things. But what I can tell you right now, gang, if this property has given you your equity back, and it comes back in the form of rent, tax deductions, and growth, then the property owes you nothing. It owes you nothing. And your job now is to stay on track. Don't lose your mind. Don't lose your way when it comes to your goal in the future. Because I see this all the time. People go, oh, I'm going to sell the property now. I'm going to sell it because I want a better one. Or, you know what, it didn't work. And I'm like, what didn't work? You're 3 years in, you're 5 years in. You said you knew this was a long-term deal. You knew this was buy well, never sell. You knew this thing was a marathon, not a sprint. Okay? You knew that we were buying good quality properties we were happy to own forever. Don't 3 years, 5 years in, be a good time Charlie, give up, cry in the corner on your soup because your friend over there, their house went up 50 grand and yours didn't, okay? And let's be honest, the value rising, and on any day, someone saying, yes, that thing's worth more or that thing's worth less, is absolutely subjective. Valuers, online data, real estate agents, the open market, no one knows what it's really worth. There's just opinions for certain things at certain times. And I might do that one tomorrow because there's 3 things that we need to understand. There's a bunch of people looking backwards into the past. There's people right now going, what is it worth today to me? And then there's people looking into the future going, what is it worth into the future? And those 3 directions of view will be different when it comes to the value and the understanding of your property. So, gang, hopefully that makes sense. It was a bit of a different one today. I just wanted to point out that right now there's all this buoyancy in the market, but what I'm noticing are some people are actually disappointed. They're like, oh, my property hasn't doubled in value or gone up or whatever. And that is poisonous thinking to your long-term goals. And my encouragement is get a handle on it because it will ruin your mental capacity to continue to build your portfolio, to continue to stay on track. Because when you give up, you're letting down your side of the bargain in the agreement. The property's there, the property's doing its thing. It's available for rent. It's getting your tax deductions. Over time, it'll grow in value. But you're the one giving up, not the property, okay? Your plan was to buy 4, 5, 6 properties. Your plan was to make sure your income was secure, solid, consistent for the future. Your plan was to improve your financial position, not make it worse. What Sam says often is property is reliable, people are not, all right? And if that's where you're at right now, I get it, I feel you. But reach out, make sure you get some coaching, make sure you check in. Because if you get caught in this grass is greener somewhere else and you're partway through building your portfolio, it will only damage you long term if your strategy and your properties are good for the long term, let me tell you. All right, gang. Well, listen, that's it from me. I've got to shoot. I've got another appointment right now at 8:10. But I thought I'd check in just a little bit early today and say good day and give you this one. Make sure you stay on track with your investing. It's super important in the good times, in the not so good times, in the times. The long-term strategy is always going to win. Long-term consistency will always win rather than short-term decisions, one way or another, flip-flopping. That never works, never works. All it does is waste your time, waste your money, and confuses you and wears you out. All right, gang, that's it from me. Done and dusted today. Nice, quick one. Wealth Coffee Chat done. Join me tomorrow at 8 o'clock for another Wealth Coffee Chat. Thanks for joining me. See you, gang. Take care. Bye for now.